Hey guys, it's Matt here from the Bull Call, and today I want to go over Lucid and the price action we could see in the following days. So let's get right into it. I'm going to open up TradingView here, and we're going to take a look at the sticks here. So based on support lines, we are pretty much back at this $45 level. Now this line was here previously, and we are bouncing perfectly off of it, and now we are currently we bounced off of it, but we did not break higher than the previous candle. And I don't think that, I mean, totally can we bounce back? Sure. There's no doubt about it. Right here, this candle was not higher than this previous candle, so you never know. It could do this, do that, and go right back, to another high at 62. But what it's looking like is it could fail to break out like it did here, fail a breakout, down, fail a breakout, down, fall a breakout, down, or fail a breakout, down. If you guys are liking the video so far, a like on the video and a subscribe to the channel would help immensely. So let's get right back into the video. So in the short term, I could totally see the price kind of fall, and the reason that it would fall is based on what I was just showing you, where the there was no significant bounce for it. So when there was no significant bounce, it doesn't have a reason to rally up higher. So I could see it try to retest this 200 EMA if it breaks the $40 level support, which I think, in all fairness, it would probably drop to 40 and then try to rebound from there. And if it wouldn't, it would drop to 36, and then I don't think it would really go lower than that. But I can never know. And until we saw, if we go all the way back here, what we're also looking for is it's here, a perfect example. Is a death cross, which is where this gold yellowish line, which is the 50 EMA, crosses below the 200, which would signify a death cross, which is a forecasting a downward movement, which is exactly what we saw right here, where we saw a low of the $17, where I had this previous line drawn, and it pretty much bounced off of it perfectly. And of course, bought more, but that's beside the point. But we're just looking for that. If that does happen, be very cautious of buying. It doesn't signify always, but it almost always normally does signify some kind of drawback. So right now, I don't see that. It's just trading between these two lines right here, and there's a lot of volatility. I did buy puts roughly around here, and they're roughly up about 150%, a little bit, maybe a little bit more. It's the January 20th, 2022, $25 puts. I'm not very bullish, but it was just a $50 bet that would cover my whole position if it went to zero. So that was literally my thinking. It was like, well, let's just say it does go to $25. I would probably pretty much break even, which is exactly what I would want. I don't want to lose money, and I didn't want to make money. Well, not I didn't want to make money, but I didn't want to lose the money that I made on my Lucid shares as of right now. So if it does technically fall to like $25, I would pretty much break even. And even right now, from just this decline, I've pretty much halved my loss, which I'm pretty happy about. And it's a pretty good strategy if you can't cover call, which is if you have 100 shares, which I would totally be doing. Like at these peaks of volatility, it is a great time to sell covered calls. But if you are stuck here buying a covered call or selling a covered call, you're going to lose money just because of the share price appreciating. When you're selling a covered call, you are selling a call option. Mostly, logically, you would sell it out of the money, and you could play this all. You could play this. You could play it out all on Robinhood. It shows you great percentages of profitability and all that kind of stuff. But you have to have 100 shares because you have to have collateral. Because technically, on a call option, you can have an infinite gain as the holder, and as the seller, you can have an infinite loss. So obviously stay away from selling calls very often. And if you don't have shares, be very cautious of selling calls or anything that has an infinite loss. It is very, it's very, very risky. But selling a covered call is a very, very good strategy for short term. I would not really go, especially with this type of stock. You can sell covered calls on the S&P 500 and all that kind of stuff, which is less volatile. But something like Lucid, where you can see a 30% jump in a few days, a 21% jump in a single day, you have to be very careful selling covered calls. I would literally like sell covered calls for like the same week, same day, or 2 days, 3 days, like on a Wednesday or Thursday or a Tuesday in the middle of the week for the Friday expiration. You'd be very careful, because if it goes above and beyond that price, you have to do it in the options profit calculator. You can see how much you are potentially going to make or lose. There's normally like a cap, whatever. If you sell a $60 call, if it hits $60, that is your maximum profit, because anything after that, at $60, you would claim $0 in. You have to buy back the call or whatever, and you pretty much you lose just the premium, and that's what you're getting is when you're selling calls, you are getting a premium. And you can just search this up on like YouTube easily. What is a call, or selling calls, or any, if you want to look up options, whatever, selling call options, selling put options. There's tons of videos out there, but I'm pretty much just dumbing it down. Like, just at peak volatility, and obviously you don't know, like this, like, could this be a good time to sell calls? Yeah, like if it keeps going down. But I mean, what if this is a bounce? I mean, then it's not a good idea to sell calls at all, unless it's like at like 60 and never hits 60. But normally, whatever call you pick, that's pretty much your maximum, because after that, you are pretty much losing the money that you're earning on your shares. So you're pretty much breaking even after $60 dollars. So I mean, you can technically lose money because you're not gaining money. But I don't really think you can lose money on selling calls on your shares, because pretty much what you're saying is, I'll sell my shares to the option holder if they exercise it for that specific price. Like, let's say I hold a 60, I'm selling $60 calls. That price hits 60 and it goes to 65. I'll sell my shares to them for 60. I make a profit because I bought it at 17, whatever, or 20 or 50, and I sold my shares for 60. So I made whatever, $100, $1,000, whatever it is. But you missed out on the opportunity for $65 of a share price to sell at. That's the only drawback of selling calls. But I mean, it's a very good idea. And other than buying or shorting buying a put or shorting the stock, that's the only other way you can pretty much like short it. I mean, there's a whole bunch of other ways, but those are like the most common. For me, since I was bearish on the short term, I'm still super bullish on this company for the long term. I mean, I can't stress it enough that I think that this one could be the next Tesla. In terms of stock, not in terms of the same company. But that's just my ideas, and just keep watching out for. Right now, it's in this little channel. We want to see a breakout back above into the $50. If you want to see it bullish, for me personally, I want to see it drop to 40 or 35. Not just because I want to put, but also because I want to buy more. Anything under 30 or maybe 35. 35. I'm gonna start nibbling if it does hit, or if it hits 40, I'll start nibbling a little bit. 35 nibble. 30. Anything under 30, 25, like, that's just like I can't believe I'm like saying this, because like months ago, like, I didn't even want to buy at 25, but now I would love to buy at 25. But yeah, so I'll see you guys in the next video. Peace out.